Hello folks, welcome to this week's edition of the Satori Traders Precious Metals News. Let's jump right into the charts. What's going on with the commodities? So a couple of different possibilities. Could be it's just straight inflation. If we look at what have the printing presses been doing in the last year? We've got a new $9 trillion worth of US dollars that have been printed since September of 20. So that's not even a full year yet. And $9 trillion of US. And then globally, it's more than that, obviously. We've got $120 billion a month coming into the financial markets from the US Fed, and globally, global central banks, it's about $300 billion a month. So tremendous amount of fiat currency being printed out of thin air at this point. And so when we look at it, just about any of the commodity charts, we have to consider several different possibilities, first being inflation, obviously, and then supply shortages. And that can look like any number of things. One of them is a shortage of people, because we've got people unable to access the workplace, social distancing, masking, all that stuff. We've got a shortage of labor, which can result in a shortage of supply. The workers can't get to the factory to produce the stuff that people want to buy. And then we've got a transportation issue, and this appears to be a global issue right now, is that people are unable to get their freight to where they want it to go. So a couple of different aspects of supply shortage. And so those two factors certainly going on strong right now. We have strong inflationary forces in effect, and that being the money printing globally. And then the narrative, there are some people who would like you to believe that these rising prices, well, number one, that they're transitory. That's kind of funny. And that number two, they're caused by an overheating economy, that as the economy recovers, we've got so much demand for commodities that prices are going up. And, let's recognize that for the load of tripe that it is. The narrative about a recovering economy ignores the massive destruction that has occurred economically in the last year. The small businesses that have closed and will never reopen, the workers who are unemployed and staying at home because Uncle Sam's given a big enough check that they're not motivated to go out and work. So there is no rising demand, in my opinion. And if we look in particular at a metal like palladium or platinum, either one of those two metals, their primary industrial usage is as catalysts in automotive catalytic converters. And again, there is no rising demand from a recovering economy, so it doesn't make sense that suddenly there's this massive demand for automotive catalytic converters. That doesn't make any sense. And so, in my opinion, we can wipe rising demand off the board from an industrial perspective. We could have rising demand as an inflation hedge, because recognize that palladium is one of the precious metals. And so some investors may be moving into palladium as an inflation hedge. So that's palladium. Just wanted to take a look at what some of the commodities are doing. Let's keep moving. And I wanted to set a context for the rest of the charts. And so that's why I'm starting with the dollar. I want to point out this strong rally on Friday. So obviously we got a big move in the US dollar on Friday, and movements like that are typical of counter trend movements. So we got this fairly significant downtrend. This is a fast and furious counter trend rally that will roll over, and the downtrend will subsequently continue. And I would expect that one or more of these moving averages would be the limit this counter trend rally, if it even gets past the 91.35 level. So again, my expectation at this point is price may make it as high as the 50 or the 20 and then roll over again. So that's part of the context. And that matters to us as precious metals investors and as Americans because everything we do is priced in the US dollar. But obviously there is a loose correlation between the US dollar and the precious metals. So what the dollar does is relevant to us as precious metals aficionados. Interest rates, same thing. Interest rates affect all financial markets because investors are continually weighing the return they can get from what is perceived to be a zero risk investment, government debt like the 10-year note here, versus any other asset where there is risk involved. And so that weighing process is going on daily. And as interest rates rise, it affects other markets. Other markets get repriced and tend to get repriced lower. And so that's two factors pushing against the precious metals last week. We had a rising dollar and rising interest rates. Let's look at gold in the daily time frame. And, again, this isn't exciting. It kind of sideways and then got soft at the end of the week last week. But again, that's why I wanted to have the context. This action at the end of last week is in light of a strengthening US dollar, albeit it's only going to be a couple of days in my estimation, and then a rising interest rates, which that's going to be more than a few days in my opinion. And so anyway, here in the gold daily chart, what I suspect is happening, and of course this is my bullish bias yet again, we've got a wave 4 finishing up. That's this down wave here. It's a fourth wave of a 5-wave movement, and then wave 5 is going to push us up into this 1810, 1820 support resistance zone and another test of the median line on this Andrews pitchfork. And so that's what I'm expecting in gold. I'll show you the 5-wave movement. So here's our origin, and so we get, there's wave 1, 2, 3, 4. And so what I'm suggesting is that we're wrapping up the fourth wave of this 5-wave movement. MACD remains in bull mode. We did not get a sell signal, or have not gotten a sell signal yet. Energy remains elevated, obviously. Let's take a look at silver, and I wanted to start with the monthly time frame. When the lower time frames get soft and squishy, I like to back up and refresh my mind on what the big picture looks like. And so in the monthly time frame, what really stands out to me is this impulsive price move. This is a 5-month rally with no pullbacks. And one of the attributes of impulsive price movements is that they move steadily in one direction with no pullbacks. And so there you go. That's definitely an impulsive price movement. And then another attribute is wide-ranging bars. And so that is a huge price bar relative to just about any other bar in this chart. Unless you get back into here, that's a huge bar. And so anyway, very impulsive, high energy movement in silver. When you're dealing with impulsive movements, the accuracy of the Fibonacci techniques is increased. And so this is an application of the Fibonacci extension tool applied to this impulsive move. And so we draw the tool from the origin to the peak to the bottom of the assumed pullback. And then the Fibonacci extension tool projects or predicts where price might run out of energy. And so with a big impulsive move like this, it would not be unlikely that we got at least a 1-for-1 movement. And so 1-for-1 in this case gives us basically $40. And again, given the impulsiveness of this move, very bullish move, expectation is that the trend's going to continue higher. Another indication that the primary trend is up at this point is that this high right here is higher than the previous high. And so the definition of an uptrend is a series of higher lows and higher highs. Higher low, higher high. This is an uptrend, folks. Let's keep rolling. There's been a lot of talk in the markets, the chat boards, etc., about a shortage of physical silver. And I don't know what the truth is. Nobody does. But if we follow the idea that where there is smoke, there is fire, there is a shortage of physical silver out there currently. And one of the interviews that I was listening to last week, the gentleman, he's a financial advisor in Australia, he was sharing the experiences of his clients in regards to dealing with Perth Mint. And so he was sharing that some of them had unallocated silver accounts and got nervous and decided to switch to allocated silver account. And so if you're unaware of the difference, unallocated means basically it's pooled silver. There's 1,000 ounce bar of silver and 6 of us own it jointly, versus an allocated account where Brian puts his money into the Perth Mint and they set aside specific silver with his name on it, not co-owned by anybody else. And so big distinction between allocated and unallocated. And so anyway, this gentleman was sharing that his clients wanted to transfer from unallocated to allocated accounts, and the Perth Mint was hemming and hawing and basically saying can't do that for four months or more. I forget what the exact date was. And so that suggested again that shortage of silver at the Perth Mint. And, the Perth Mint is backed by the Western Australian government. They're not just a refinery of silver and gold, they're a government mint. So a contractual failure to deliver would be a big deal from the Perth Mint. What they did, the Mint and the government, according to this gentleman, is they went to China and secured physical silver, brought it back to Australia. And so investors who have invested in silver certificates at the Perth Mint and are currently demanding physical silver either for delivery or transfer into an allocated account, what they are getting currently is Chinese silver. And, first blush, who cares? Silver. But part of the reason you invest with an entity like the Perth Mint, it's all about trust and security. It's the Perth Mint, 100 years of history, never had a contractual failure to deliver. Actually, there was some smoke a couple of decades ago. But anyway, it's all about trust and security. And so when people start talking about shortages and inability to deliver, that's not a warm fuzzy in the silver market. And of course, there's more smoke in regards to silver shortages, the silver squeeze effort. And at this point, folks, who knows what's true in the financial markets? The hedge funds manipulate the markets as best they can. Everybody's trying to manipulate the markets. If you're interested in physical silver, I like junk silver. I like it rolled. I was just checking what's the real price of silver, because in my mind, the real price of silver is what it costs to take delivery and get it in your hot little hand. And so currently at APMEX, the real price of silver is, I think that's about $34.80 an ounce. And I like this form of silver. It's convenient, roll of dimes, it's compact, tuck it in your sock drawer, put it in your safe, wherever it is you want to store that. That's a nice way to save silver. And a thought occurred to me, if there really is a shortage of physical silver, that perhaps companies that advertise coal or damaged silver coins, this might be a source of supply when other sources disappeared. But if you look at the price here, so they're saying that's $31 per coin. Well, there's only 0.715 ounces of silver in a dollar coin. And so the per ounce cost of this coal junk silver is about $43. So that's a $9 premium. The difference between those dimes and those dollars is that's $9 an ounce. I see no reason to pay that kind of premium unless that was the last silver available. If I really wanted silver and that was the last I could get, well, the price is $43 an ounce, and there you go. In the daily time frame, silver, we're bumping around conflicting support and resistance in here. I'm not concerned about this price action. You know, it's weaker than I would like. But in reality, when we consider the context, you know, this being the context, silver's not looking bad. And so anyway, I'm not concerned about silver. And you can see that basically it's riding this upper median line of this Andrews pitchfork, and price is just kind of bumping along. You know, you could talk about that as a test of support, riding at support. Let's look at the mining stocks and the weekly time frame. This not as, you know, obviously not what we'd like to see from the mining stocks, but basically a pullback to the 10-week moving average, test of support. So we're not in trouble in the weekly time frame by any means. This uptrend, what we're assuming is a new uptrend, is still intact so far. In the daily time frame, again, soft at the end of the week, but in light of the metal action and the dollar action, all we got out of the mining stocks was a pullback to the 50-day moving average. That's, if you can see it right there, that's the 50-day moving average. It's the top of the channel, this downtrending channel. It's the lower median line of this blue Andrews pitchfork. Anyway, it's a confluence of support. We did get a rise in volume as price dropped. And so that's always disconcerting when you see a rising volume as price drops. That's not a bullish indication at all. So we did get a new MACD sell signal last week. This interesting how you handle whether you're a trader or an investor, you look at a MACD sell signal differently. And again, it's just one indication. We also got a big drop in energy. So a lot of energy came out of the mining stocks last week. Investors have shifted focus elsewhere. Still very similar, only we got a drop through the 50-day moving average. And so that's, again, disconcerting that we dropped through that level of support, but no surge in volume. So we didn't have a bunch of sellers kick in and sell that fall. We did get another sell signal here, and of course, big drop in energy. So mining stocks are soft. Dollar in the weekly time frame, so pull back to support in this time frame. Currently in a rally, expectation is that we're going to get another rollover, and we'll see what the dollar does from there. Interest rates in the weekly time frame basically looks like a pullback to the 10-week moving average and a finding of support, or riding that level as support and moving higher, obviously, last week. The equities, so SPX, we got this so far, looks like a throw over to a new all-time high across a round number, 4,200. That's a very bullish candlestick, and then it failed. And so the failure to hold 4,200 after that big bullish candlestick makes me think more that was a blow-off top. Yeah, the more, as I sit here thinking about it, that looks like a blow-off top, followed by a failure on Friday. But again, we have to acknowledge a failure in light of a rising dollar and rising interest rates. So we don't want to read too much into that. Energy's still elevated. We did get a MACD sell signal. I'm being kind of snippish here. Somewhere down there's the 200-day moving average. And I want to point that out as indicating how overbought these markets are. Horribly overbought. So that well could be the final hoorah, throw over high, and subsequent downtrend. But with that said, let's also point out $120 billion a month coming from the Fed into the financial markets, 0% interest rates. That's what's elevating these markets. There's no economic strength. There's no rational reason for markets to be at these levels. It's strictly a monetary effect. And there's no reason to expect the money printing to end, which means higher equity markets aren't going to be surprising. So the Dow's obviously struggling to get through 34.3. And in the last week, energy has started dropping off. Of course, we're riding this median line as support, 20-day moving average as support. This sideways action, it's actually energy coil. It's giving price a chance to gather energy for its next move. Now, we don't know which direction that next move will be in. It could be up, it could be down. If it is down, the potential is for big down because price has been able to gather a lot of energy there. When price moves out of an energy coil, the movement is likely to be impulse. Nasdaq, big bear, or not big necessarily, but a very bearish candlestick on Friday. That's not pretty. We got a new MACD sell signal, energy obviously dropping, still elevated, but dropping. So yeah, that's a bearish doji on Friday. And let's zoom in on that and notice that this candlestick here found support at this level right here. The next candlestick, this is Thursday, tested the 20-day moving average for support, and then buyers pushed price all the way back up here, clearly above this support level. But on Friday, no buyers came in. That's the real point that I want to make. No buyers stepped into the market and recognized that as value. On Thursday, the 20-day moving average was value. On Friday, it wasn't. There were no buyers on Friday. And so that's bearish activity in the Nasdaq. Brent pushed up through that resistance level, couldn't hold it, got to pull back. But again, all of the commodities are priced in the US dollar, and the US dollar was strong last week, and in particular on Friday. So not terribly surprising action, and clearly the trend in oil is up. No question about that. Got some charts open. Newfound gold. So we looked at newfound gold 2 weeks ago. It was down here pushing against this 440 level. Obviously, it's made a big move in the last 2 weeks. That's about 30%. One of the challenges in the mining stocks is that when they move quickly and they move big. And so, if you were in newfound gold back here, you're feeling pretty good. Hey, I'm a genius. If you were thinking about buying back here and said, well, I'll wait for a pullback, now you're kicking yourself in the tuchus because clearly there is no pullback here. The investment or trading decision is obviously very different up here. Can't recommend buying it up here like I could down here. So move in newfound gold, obviously, in the last 2 weeks. What's interesting to me, newfound gold, remember, they're in the process of obtaining a listing on the New York Stock Exchange. And I was assuming that they would come onto the exchange under $5 a share. It doesn't look like that's going to be the case. They're going to list above $5 a share, and that means that institutional buyers, not all institutions, but some institutional buyers will have access to this stock because it's above $5. And so any number of positive catalysts in the future for newfound gold, and it doesn't hurt that they're sitting on what appears to be a world-class mineral deposit. They just keep high-grade drill results one after another. Let's see. So on Friday, got a nice pop in Loro. They've got a big asset, big mineral deposit. They're looking good, rising volume, rising energy, moving into bull mode on the MACD. This is a company, this stock, regardless of the fundamentals of the company, the stock is technically poised well for a continuation of the uptrend when the mining stocks move into rally mode, definitively move into rally mode. NV Gold, this is a penny stock. It's a quarter, obviously, currently on the OTC markets. Wanted to point out that it's making a high energy movement in the last week or so. You can see these bursts of volume, and notice this is occurring, in light of weakness in the metals and other mining stocks. We're getting positive movement here. This is high energy price action right here. High volume, MACD buy signal moving up into bull mode, investor interest coming back in with the accumulation distribution, energy elevated and rising. So if you're into penny stocks, this is one you might want to look at. Notice that all three moving averages are in alignment in the up direction. They're not in bullish alignment yet. We need the 50 and the 20 both above the 200 to have full bullish alignment, but all of them pointing up. Friday's price bar jumped up through the 200-day moving average and closed well above that level. So might expect some pullback, find support along, would actually like to see this vehicle find support along the 200-day moving average before moving too much higher. And that draws me to the end of the charts this weekend. I've gone a little bit long this week. Hopefully I've provided enough value to make up for you spending your time with me. Have a fantastic week going forward, folks. And as always, I enjoy spending this time doing these videos for you.